Hey, Kelsey, thanks so much for joining us on the show. Thanks for coming.
Thank you. Thank you so much for having me.
Yeah, it's totally my pleasure. Could you just dive in and tell me a little bit about your background and how you got to where you are at HomePay?
Sure. My name's Kelsey. I've been with HomePay for 9 years. I think my anniversary is in like 4 days. So it's
Oh,
almost
and happy
exactly 9 years.
happy anniversary
Thank
almost.
you. Thank you. Yeah, it's been a journey. I started when I was still in school, so finishing college at Texas State University, and I've just kind of moved around with different roles at HomePay. I was in an administrative role, an operations role, on the sales team for several years, and then now I've found my home on the partnerships team, and I've been here for about 3 years now.
Wow, what do you do specifically in partnerships?
So I work with kind of there's like two branches. So we have our partners, our nanny agency and senior care agency partners, where we work directly with them who refer their clients over to us, and then we help them get any kind of household employees set up on payroll and work with clients directly. And then there's another bucket where we work with our like accounting and financial advisor partners. Same thing to assist their clients with getting payroll set up. So I kind of do a little bit of both. A little bit more of my focus has been on the accounting side. Melissa, who I work very closely with, works with a lot of our agency partners, but we still work very closely together. So that's kind of my role is managing on both sides.
That's awesome. That
Yeah.
explains your warm, friendly presence and able to talk about
You're so sweet.
complex things. Yeah. Um. So actually, let's rewind just a tiny bit. Tell me more about what is HomePay.
Yeah. So HomePay is a tax and payroll service that exclusively works with household employers. So if you hire a nanny, a senior caregiver, even a private housekeeper, anyone that was working in your home, we support their payroll and then we make sure that families are compliant with all the different taxes that are required. So some people don't realize, when they have somebody in their home, they think sometimes of just a babysitter. And, babysitters back in the day, you give them, however much at the end of the day, and then that's it. You don't necessarily think about, I'm an employer now and I need to do taxes. And that's true, if it's just a one-time sitter. You're paying, usually just, $100 maybe at the end of the night, and that's it. But when you're hiring somebody that has a recurring schedule, where they're coming, back to the home on a regular basis, more than likely you're kind of crossing the different tax thresholds to where you are really an employer and you have to get the wages reported. So our system assists with that. But we exclusively work with household employers, and we've been in business since 92. So definitely are the industry kind of experts in this, and really make it easy for families to make sure that they're paying legally, but also that it's still really easy for them to do so.
Awesome. So obviously since 1992, this has
Hmm.
been happening.
Yep.
What is it that is the hurdle? I mean, it just feels scary to me and I don't even do it or need it, but I feel like there's something there about getting on the grid in this other
Yeah.
way. Like, is there anything to be worried about or what kind of is the sell to this?
Sure. I feel like the worst part is just the fear of the unknown, right? Like, I think families think, it's complicated. I've never been an employer before. I have no idea where to start. And it's super, super common. Most people, are usually like, let's say in the childcare space, if we just look at that, are, a lot of times first time parents. They're having to navigate, the ins and outs of just having a child in the home for the first time, let alone having to figure out this next piece of being an employer, right? So I think it's mostly fear of the unknown and just not having a lot of time and thinking that it's going to be a big to do to kind of get things in place and not knowing where to turn, especially if you're not working with an agency, right? If you're just trying to kind of hire on your own, there's not a guidebook necessarily out there. There's so many resources. And now, with AI and all the things, like they try to make it easier, but it's just information overload. So the great thing is if you are working with an agency, agencies have resources to point their families in the right direction of saying, this is required. Here's some easy solutions to get it taken care of for you. And then once we're able to connect with families and give them a consultation and explain that, yes, these are all the things that are required, but assure them that here's your portion of how you have to handle that. Let us handle the rest. It's usually a huge sigh of relief for families. And they're willing to then go forward to make sure that, they are on the up and up with their caregiver. And then we can kind of go over, what the benefits are. Because there are benefits of paying on the books, right? Obviously, compliance wise, you're paying above board. That's always great. But just, different tax breaks that are available for families to offset, this additional expense, or even a benefit through your employer. You can usually take dependent care FSA that again offsets some of this additional cost. And then of course for the nanny or for the household employee, there are benefits of just having, pay stubs as proof of income and W-2s. Like, when you go to get an apartment or a car or any loan, you have to have proof of income. And this would, getting paid on the books will get you all of that kind of documentation. And then, of course, there's other things about, being able to qualify for potentially unemployment if you were ever to be let go for no fault of your own. If your state has any like paid leave benefits that you're able to qualify for, and just overall having those Social Security and Medicare benefits. So definitely benefits on both sides. And again, it's just more of getting the information to the family in a digestible manner. And I think that really is like the first step in both sides of making sure that you're.
Stepping into your shoes, and you might have touched on this already,
Mhm.
but if I'm an agency owner, what do I tell a family to get them on board, or how do I
Mhm.
have that conversation so it feels less scary? Like, I know you've said some of these things right now, but I'm thinking, how do I even pitch this to a family? Like, what am I saying to them?
Sure, sure. I think that the transparency is key and making sure that when we're talking about coming up with budget and coming up with, the nanny's salary or hourly rate, that the family is factoring in this additional cost. So explaining that when you hire somebody and you pay them over the usually just kind of touch on the federal threshold. So if you look at that, if you pay somebody over $2,800 within the calendar year, and we're talking for 25, it usually goes up a little bit each year. We're looking for 25. If you cross $2,800 over the whole course of the whole year, then you are required to report the wages. So obviously, with an agency, even if someone's working part time, you're going to cross that threshold pretty fast. So, explaining to families that you are required to report their taxes, and we have a partner that we can recommend you to that makes that process super simple. But on a high level, just kind of bullet points, you do want to factor it's about 10% is what that additional cost is going to be for you as an employer on top of what you're going to be paying your employee. So that's kind of like the magic number to kind of set into families' minds when they're coming up with budget, because that way they know, if I'm going to pay my nanny $30 an hour, I really need to mentally think 33 if I'm tacking on that 10%, right? Plus, then if they're going to be working with a payroll service like HomePay or others out there, they'll need to factor in that additional cost. And then if there's additional cost, like workers' compensation, which is required in almost all states, not all though, obviously highly recommended, that would kind of be the additional cost. So letting families know that this is a requirement, there will be additional things you need to budget for, and just setting that expectation as early as possible in the hiring process. And then that way you have that transparency throughout, and then it doesn't come as a surprise at the end and jeopardize the placement.
Yeah, that's fantastic. So I'm already thinking that I have to now add that 10% in.
Mhm.
And on top of that, I'm thinking about like the added cost of using a service to do that, which I understand that. Easy. I'm like, that sounds too complicated, too scary. Like if anyone is using if anyone is not doing taxes totally on their own, like that's probably the way to go is like a service is probably what you need, right?
I believe so. So I mean, I've worked here, like I said, I worked here for 9 years. I know more than the average person when it comes to, household taxes. I wouldn't touch it myself. I would 100% go on payroll just because it's not my area of expertise. There are deadlines that you have to meet in order to avoid penalties, and you just don't want to mess with it. You pay, what is it, $20 for Netflix now. You pay $75 for your phone. Like, there are additional costs that we don't think about, right? Like, and it's a no-brainer. Of course, I'm going to have a phone payment, 75 bucks a month or, whatever it might be. And so to me, to have peace of mind to pay for a service where I don't have to deal with that, the liability is on the service to make sure that they take care of what's required for me, to me is a no-brainer. And especially if it's something that you're doing, like you said, if it's not what you normally do on a day to day, definitely recommend it at least at first. Maybe do it for a quarter or two, maybe do it for the first year. And then at that point, if you feel like, you are could take over the filings yourself, at least you're in a better position to do so if you ever wanted to do it on your own. But usually by the end of that quarter, year, you understand the value of a payroll service and what they bring. And it's usually something that families keep however long they end up needing care.
Well, I'm already feeling much better about this. Also, not in my situation right now because I feel like I
Sure.
am getting like a free consultation here. Because, like, I don't like all of the things that a family has to do, whether it's elder care or childcare. There's
Hmm.
now a lot on your plate because you are
Right.
officially an employer. So
Right.
doing this, the maybe the least fun part, unless you love doing
Who
accounting.
does?
Like this is
Let's
yeah,
be
you should try
honest.
take this off your plate.
Right.
You said something really interesting about the budgeting process. And
Huh?
now I'm thinking, at what point should I loop you in about like, hey, I'm thinking about getting a nanny, or I'm very close to the hiring process, or I want to make them an offer. Like, what point should I be like thinking about like, oh, I should contact one of these services like HomePay to walk me through what it's actually going to look like in the end?
Right. I mean, we have clients that either are coming to us directly or being referred over from agencies really at all stages. Ideally, I personally think it's best to be as upstream in the process as possible just to get looped in to know, what the basic requirements are. Again, what are the things to budget for? And then that way it's just something to keep in the back of your mind as you move through the hiring process. And then you have more of that full blown consultation of actually crunching the numbers and talking through how the service works and kind of what to prepare for once everything is up and running, once you are getting ready to officially make that offer. And then that way, we can kind of feed in different things to be thinking of. For example, we're coming up and, we're mid October now on open enrollment is coming up in November. So if you were to have a conversation early on and just know that I'm hiring a nanny not even until next year, not even until January. But if I know that I'm hiring now and I communicate that to an agency if I'm working with one, or if I contact a payroll service knowing I'm hiring a nanny later, it's great to know that I can sign up for the dependent care FSA through open enrollment now to prepare me to have that ready for me to use that next year. So it's never too early, in my opinion. If you know you'll be hiring, just get as much information as you can up front. You might not need it all now, and we can certainly revisit it once you get further along in the process. So that's what I recommend. But definitely have had conversations where they've already made the hire, they start date's going to be on Monday, and they have no clue about taxes. And we're talking about it, within the 11th hour. And that's completely fine. Turnaround time for payroll is usually pretty quick. We can get things up and running, but it's just a matter of the family being able to digest the information, have the budget for these additional expenses, and then be good to go for the start date.
So what I'm kind of hearing is this should just be part of that learning process where you're reaching out to people in general. Just add talking about payroll to some expert about that into the like, I'm looking at childcare options. I'm talking to agencies. This is
Mhm.
just a thought that I know I'm having a trial. I'm going to need to think about some of this stuff. This is also just one of those stops in that journey.
Right, exactly. So again, we keep talking about childcare, but for childcare, I know that I am going to be needing care and I know that I'm going to go the private employment route versus a daycare. Obviously, if you're going with daycare, we probably don't have to have a conversation with you. But if you're leaning towards an option of, employing somebody in your home, that's just one of the boxes you'll check off. So, there's obviously multiple options of where going to find that nanny or caregiver, but then out of that, there's that separate bucket of how am I going to pay this person? And hopefully with a family that is either, doing everything on their own or through an agency, they get looped in or find out right away that there are additional requirements other than just, oh, here's a Venmo at the end of the week or here's a check. And so that way, whether they're thinking about trying to tackle it on their own or not, they see, what the additional requirements are. They know what to budget and they can try to plan that conversation, ideally, like I said, as early as possible, just to make sure that all their boxes are checked off. And like I said, if there are things they could take advantage of when it comes to tax savings, they're in a great position to do so and feel comfortable, like I said, in advance as possible.
This is good. I think I'm tracking like all of this. So a little bit of a rewind too,
Yeah.
that you had mentioned the 10%, like
Yeah.
budget that in.
Yeah.
And then you'd also mentioned like there are benefits to this.
Hmm.
Is there a way that I can claw back some of this 10% to make it truly worth it?
Yes. So I'm just glancing over here. So there's basically for someone that's hiring we'll just kind of stick with nanny. Someone that's hiring a nanny, there's really two tax savings for families to take advantage of to offset a portion of that 10%. So the one that I mentioned that's would be to sign up for during open enrollment is getting a dependent care flexible spending account set up with your employer. So, big mouthful. But basically, if you have the option and if you've heard of an HSA through your employer, more than likely you have the ability to set up this flex spending account. So, for this year, and good news is it's actually going up. So, you'll save even more next year. But let's just look at this year. Families are able to basically set aside $5,000 of pre tax income and stick it in this FSA account to then submit receipts or proof of payment to their employee to get reimbursed from that 5,000. So for us, if you are set up on our payroll service, you'd be submitting your nanny's pay stubs. That's showing proof that you paid the employee, X amount. So you're able to submit essentially $5,000 worth of pay stubs to your employer to get reimbursed from that 5,000. So what you're doing is you're saving the taxes that you otherwise would have been taxed on that 5,000 of your income. So depending on, what the tax rate is, generally families are saving around $2,100, $2,300 just from that tax break alone. So again, it's going to offset definitely the payroll service fees and then dip into that additional cost of 10%. It's not going to offset the whole thing, but it's definitely going to take a good chunk out. So that really is the best tax savings a family has is utilizing that dependent care FSA. Now, I mentioned the limit for this year is 5,000. Next year it's going up to 7,500. So families will be able to save even more now, closer to now $3,000 to offset their taxes. So that's really exciting. I don't think there's been a change since the 80s in the tax breaks, if I'm not mistaken, for this. So it's been a really long time coming. So that's exciting. Now, for individuals that maybe don't have the ability to set that up, there is just the child care tax credit that you claim at the end of the year when you're filing a return. That one, it depends on how many dependents you have. So if you have two children, let's say, the expense limit, and this is where it gets into numbers, but it's $6,000 is your cap. You get a 20% credit on that. So you save $1,200 at the end of the year if you have two dependents, $600 if you have one. So again, if you're looking at both options, care FSA is your way to go. Can't really stack them super cleanly. Um, if that's probably a
That's
follow-up
my next
question.
question.
Yeah,
I want to
yeah.
like that coupon stacking that people try to do, and they're like, you can only use
You can
one.
only use one. I know. There is a way you can combine it just because, like, for this year, remember I said the expense limit is 5,000, but with that tax credit, I said it was 6,000 if you have two. Technically, you could use 5,000 with your FSA, have $1,000 left over to get 20% credit on. So you'd save $200 at the end of the year with the tax credit. So that's really the only way you can stack it. If you have one dependent, then you have to pick one or the other.
I also love, and I want to just highlight for everyone listening, this little part where you were like, you can kind of do it, and then you walked us through like a very nuanced way. They're like, who is gonna think of that, or like
Hmm.
spend enough time to have figured that on your own? Like that's the type of thing where like the institutional knowledge of working with a payroll service is
Right.
really going to pay off.
Right. Especially as things change next year, right? So like I said, it's going up. Both the expense limit is going up from 5,000 to 7,000, and then for that tax credit, it's changing and it's going to be based on income, so it gets a little bit more mathy. So that's where it's best to just call in, get your consultation, see exactly what you'd be able to save, and then you still will be able to know which one makes the most sense for me.
Amazing. So we talked a lot about like nannies. When it comes to home care or like we're talking about our elder loved ones,
Sure.
is there a big difference with that and like how it works or things you need to think about, or is it very similar?
Very similar when it comes to the core like tax requirements. All the thresholds are the same, all the deadlines are the same, everything when it comes to that, that's all the same processes, right? Tax breaks are different because this isn't a dependent anymore. So there potentially are like medical tax breaks that the individual that's receiving the care would be able to take to offset a portion of this. That's where I would consult more with like an accountant to see what specifically that person can qualify for. That's really the main difference is going to be more on the savings side. Now, obviously it's great for everyone to have workers' compensation coverage just in case there were to be an injury in the home, just covers the employer from any liability related to the injury. It is required, like I said before, in most states. For states where it's not required, if someone's thinking about having that or not, the likelihood of an injury is more likely on the senior care side just because you're having to help with, more daily tasks depending on how, sturdy they are on their feet or how much, what your job necessary responsibilities are. I would definitely say with senior care to make sure that you have the coverage, but generally for both, it's best to have the coverage just to not worry about that. But I would say, especially on the senior care side. But other than that, there's really not any differences as far as reportings for both senior care and then for childcare.
That's again, that's like that institutional knowledge of being like, oh, here's really why you should think about doing workers' compensation, which also sounds really scary. Like, is it like how does somebody set that up if they weren't using a payroll service? They have to like contact their state government, right? Like, right?
Yeah. And so everything always depends, right? But we have a third party that we work with very closely that anyone can go to, regardless if you're a home pay client or not, that you can go through to have them set up the policy for you. So that would be one. Another one is you may contact your homeowners or renters insurance to see if you could add workers' compensation to your policy. That might be, more advantageous from a cost perspective since you're kind of bundling everything together. Some insurances won't. So if they don't allow you to set up workers' compensation, you do have to kind of go through that third party. And then other states like Washington is the one that comes to mind, has to be set up through the state. So there's kind of three buckets there. But yes, either your own insurance through a third party or through the state directly would be your options.
And then yeah. So like I feel like we're going through these waves of like complicated thing, uncomplicating it, complicated, uncomplicating it. If I was needing this service, I have a nanny or I have someone coming in to help me with family.
Mhm.
How complicated is it once I actually start doing this to like am I calculating hours every week? Like how much am I still like putting on my like that
Great question.
visor where you do your taxes and you get like it does the green
Yes.
filter? I'm
Yes.
like doing that now and that's terrible.
I'm following.
Yeah, like how hard is it to actually be in the process doing it?
Sure. So it really depends on how consistent the caregiver's schedule is. So if you have someone that you have basically like kind of guaranteed hours, you know for sure that you're paying them for, let's just say, 40 hours a week. With our system, you can set it up to where payroll will automatically run every week at whatever that default hours are. So it would automatically run every week in this example 40 hours. So as long as they work that consistent schedule, it's pretty hands off for the family or for the individual at the employer to keep things running. Payroll will automatically go out every week, do the direct deposit for the caregiver, taxes are automatically withheld, And then email reminders go out before taxes are collected, notifying, of course, the client of what's due, when the taxes are coming out, when any service fees are coming out. And then other than that, there's no manual requirements for an employer to take care of payroll unless there were to be a change. That's only the time where you would have to go in and obviously make sure that we have the correct hours. So if it's a super consistent schedule, it's just a one time change. You go in and update it for that pay period. The payroll is adjusted. The following week, it would go back to the default. Now, if you have someone that has an inconsistent schedule, we do have timesheets that are included with our service to where the employee can fill out their start and stop time for each day. And then at the end of the pay period, they would just submit that timesheet to the family for approval. And then it's just a simple approve button for the family, or if something's incorrect, they could send it back, get it corrected, have it resubmitted, and then approve it. And then again, payroll would just run based on those submitted hours. And then they continue to do that each week. So usually it would just be like a one time weekly involvement or bi weekly, depending on how often you choose to pay your employee. And then depending on how consistent their schedule is, you might not even have to go in at all.
What I'm getting from this whole conversation is if I'm going to use payroll, which instinctively I feel like I should do, is it's really important to feel like you're using a company that you feel like is on your team with you. Like I feel like I'm asking you kind of crazy questions, but they're probably not. These are probably things that you kind of go over often with families and that
Absolutely.
they have questions with or agencies that you work with. This is kind of just some of that standard stuff that you need to feel comfortable asking someone.
Absolutely. Right. And like you said, like in the beginning, it's more of what does being an employer mean? What are their requirements? How much is this going to cost me? And then we kind of we come down from that. We answer the questions. We get comfortable, and then it's okay. I'm comfortable with being an employer, but how much work is this really going to be for me going forward? Hopefully I have my employee for a year, or hopefully even longer, depending on what the situation is. So how much work is it going to be for me? And like I said, it's just a matter of making sure that we know that we have the correct hours in the system to process payroll. Other than that, you're pretty hands free. Good thing is that your employee with HomePay can also go in and access their pay stubs on their own. They can call in and contact HomePay if they have any questions. They obviously aren't able to make any changes without you being involved. But if they just have a question on, how do I find my pay stub, or I want to change my withholding elections, how do I do that? HomePay can also talk with your employee directly. So you're not necessarily always having to kind of be the middle person between the service and your employees. So we do kind of act as that HR kind of high level to where we're able to talk with your employee directly. Get them the documentation that they need to where they feel confident in the service as well. And then that way, that's even one less thing that hopefully you're having to do.
Before we wrap up on this, I wanted to ask you something that you kind of touched on, and then I had my brain kind of scatter around. Where you said hopefully you have them for like a year or longer, depending on the situation or anything like that. I'm thinking with my home care hat on that maybe I'm thinking that doesn't even go a year in the most tragic sense of
Hmm.
things.
Hmm.
Is it still worth it to use payroll? Like, how does that work? Is it too hard? I don't know. What do I do?
Yeah, no, great question. So, like I said, towards the beginning, that federal tax threshold, it's only $2,800 within the course of a year. So if you're planning to cross that threshold, even if you're only planning to have your employee, let's say for the summer or, a few weeks, if you're paying someone, $20 an hour, $30 an hour, which seems to kind of be the average, even upwards of that, you're going to hit that threshold pretty quick. So even though you might only have an employee for a month, a quarter, a summer, half a year, I believe it still makes sense to work with the service to get all the X's and Y's and Z's taken care of for you. So you don't need to do it, even if it's super short term, because all the requirements are still there. You still have to do some filings. You might be crossing 2 quarters depending on what time of year you're looking at, so it's not just as simple as 1 quarter filing. And then you have all the documentation you need at the end of the year to be able to file not only with your return as the employer, but that individual needs a W-2 to be able to file with their taxes. So I do think even if it's something that's short term, if you're planning to be over that threshold, definitely makes sense to use a payroll service or at least be aware of it for you to potentially try to tackle on your own, which we talked about that. But and then with HomePay, it's very simple. If you do end up using our service to be able to close out your account, because things happen, plans change. Maybe you only hired a nanny until you're able to get into daycare and it's super short term. Maybe you hired care for a family member and unfortunately, that didn't work out and they have to do another solution. So you can close out your account anytime. Again, make sure everything's wrapped up for you for whatever quarter that you're in as far as filings and then all of your documentation you receive at the end of the year.
I feel great
Great
about this.
question.
I feel like this is not a heavy thing to worry that it's on your back. Using payroll like HomePay, it's just there to simplify things for you. It doesn't
Mhm.
have to be a long thing that you're locked into. It can be something much shorter. It's just that extra helping hand with experts to trust.
Exactly. Yep. It's to make sure that you're not having to read through pages of publications to figure out exactly what you're needing to pay, when you're needing to pay it, what kind of documentation am I having to give my employee? Do I have to provide any notices up front or at the end? There's just all kinds of little things that could just easily be missed to where whether it's short term or long term, at least just have the consultation, right? At least get the information and then make, your educated decision based off of whatever you feel comfortable with from there, right? Like maybe it's not in the budget, but at least you have all the information to make that decision. So, at any point in the hiring process, I would give any kind of payroll service a call, get the information and then to see what's the best fit from there.
Kelsey, thank you so much for joining us and sharing all of this. I know you could probably answer even more questions I feel like are bubbling up in my head. But how does somebody learn more about you and HomePay, or like what are their next steps?
Sure. So you're going to visit us anytime online. So be partners dot myhomepay.com. And my contact information's on the website too. Our team email, we'll have it, I'm sure, up somewhere, but the partners at myhomepay.com. And reach out. Our phone number is on the website. Like I said, that's going to be your best place to start. It's just getting a call in, whether you're an agency that's looking for more information to be able to provide to families, whether you're a family or a nanny that's hearing this or a caregiver that just wants to get some more information as well to pass along or to have, reach out to us by phone, contact us over email, look at the information on our site, and we'd be happy to talk with you and answer any questions on your specific situation.
Perfect. Kelsey, thanks again, once again. Thank you.
Yes, thank you so much for having me.